Very good. Good evening, everybody. I'm conscious that I'm last, it's late, it's hot, and the bar is about to open. So whilst I'll cover all the slides that you've got in your pack, I'll only really dwell on two. Once you've got what we do and the business, how the business stacks up, you pretty much understand that you can connect the dots. And I'll take you through the strategy very briefly. And then a slide at the end that shows, I hope shows, where the strategy takes us over the next 2 or 3 years. We have some interesting parallels with the stadium. For 40 of its 50 years, Porvair was a chemicals business making polyurethane. Some of you will remember that. It listed on the USM in '88. But for the last 9 years, it's been a filtration business. I joined it as a chemicals business, and for all sorts of reasons I won't go into, chemicals was not a good business to be public with, but filtration is fantastic. And here's essentially why. First of all, we followed the same strategy now for 9 years. It's one of niche positions in growing and regulated markets. I'll tell you about that. And it is particularly about new product development. A very strong new product development culture that we follow, and you'll see the benefits of that. Over the last 5 or 6 years, I'll show you the results very quickly, but essentially we can grow this business at around 10 or 11% a year, and I'll explain that to you. It's very cash generative, very low capital intensity, and about a 30% return on operating capital employed year in, year out. And a pretty good set of results for last year, which we will cover very briefly, but I don't propose to go into in any great detail tonight. This is the first slide that I'm going to just dwell on, because this really, once you get this, you get the whole story. This which is the sort of thing that we make, is off the hydraulic line of a 737 landing gear, a specialist filter. There are filters everywhere, 2 or 3 air filters above you, the water's filtered, the plastics to make the carpet are filtered, everything's filtered, right? It's a very, very large market. And the more specialist the filter, the better the margins that you're going to get for it. So specialist filters protect much more costly downstream systems, and once you understand that, you understand pretty much the whole business. So whereas when you take your car in for a service, you might spend 25 or 50 or 70 pounds for your car. So it's all the guy's going to do is drain the oil out, replace the filter we call a screw-on filter. That filter will cost him £12. He'll charge you 70 quid for the job. He will have bought it for about 6, and it costs about £1 to make. And the reason that you spend 70 quid on something that really is 3 or 4 quid's worth of value is because you are protecting a several £1,000 engine block. And once you get that, you get the whole business, because once you start protecting the undercarriage of an aircraft or a power station or some bioscience systems, you begin to understand how the business works. When I'm selling you a filter, whilst we will argue about price, in your mind and in mine is, if this doesn't work, or if it doesn't work for as long as I want it to, or it doesn't work as I want it to, I've got a much bigger problem than saving 10% on the price of this filter. And that's what the whole business is about. It's got a number of attractive characteristics which flow from that. About 80% of what we do is consumable. Once you've got the filter specified, very similar to Korak, it's going to be replaced either every day, or every time it's used, or every 8,000 hours, or whatever the maintenance schedule is. Very long life cycles, just as we do some submarine work, 30, 40, 50, 60 years worth off the same drawing. And just about everything that we do is bespoke, a given filter for a given application. That means your demand drive is relatively robust. There's nothing discretionary. You can't decide not to run the filters this week or this month. You have to run them. Very often, you know, it's legislated, and I'll take through that. And increasingly, and this is where the new product development focus culture comes in, it's about barriers to entry and patents. About a third now of what we do is patent protected, up from almost nothing 5 or 6 years ago. So those characteristics answer all sorts of questions that we couldn't answer in the polyurethane business. Why can't a Chinaman do this? Very good reasons in much of what we do, not all, but much of what we do, how we can answer that. Why can we do this in the Western world at all? How confident can we be that next year's earnings or next month's earnings are going to be related to this month's earnings? Difficult in a chemicals business. Very straightforward here. So there's lots of things that are attractive about what we do. So once you get that, the rest I can now start moving pretty quickly. It's a very simple, straightforward strategy. We've been following it, as I say, for 7 years. First of all, in a very wide field, you've got to decide on a few things. You can't do everything. We have 4 markets that we follow, and we bring a new product development focus to that, because in this line of work you can probably grow with the market, and I'll show you that's 5 or 6% through the cycle. But if you want to do any better than that, you've got to do it principally by organic growth, and that means R&D investment. You've got to follow the markets that you're in geographically. If you're in aerospace, you've got to be in the States. If you're in water, you've got to be in China, and so on. And then importantly, for investors anyway, you've got to be very clear as to where the cash that you generate, and there's a lot of it, is going to be invested. And for us, it is number one, organic growth, for reasons I've just explained. We do the odd acquisition. We made 3 small ones last year. We made 1 tiny one so far this year. And a dividend. We take a dividend very seriously. It's not a high-yielding stock by any means, but we have a progressive dividend policy, and we do all that within a sort of culture of conservative balance sheet. So that's it. Hasn't changed. I presented that slide hundreds of times. Just let me then sort of unpick it a bit. 4 markets: aviation, energy, environmental, laboratory supplies is a rather fancy word of saying water analysis, and molten metals. All of these things need filters and analyzers. By regulation, you see what we mean there. I think the aviation story is probably the clearest understood. You simply can't decide to make aviation filters or any other aviation components in your garage easily. It takes years of accreditation to do that, and that gives you a certain amount of competitive edge. Water is a more subtle example. The water here, which we probably filtered and certainly would have analysed, has to be analysed by a given method, otherwise it's not passed as clean. And that method may or may not have your kit specified in the method. So these sort of areas of regulation are terrific. And then market growth, well, frankly, those numbers ebb and flow. The blue numbers are relatively steady. The green number for molten metals is a bit more cyclical. We're an industrial business. We certainly don't defy gravity. Very quickly, these are the 4 markets and how we line up as a group. We only put that in because as you go through the slides, you'll see blue slides and green slides, 2 divisions, 4 operating companies, 4 management teams, 1 very small corporate head office, myself and a finance director, and that's probably the share of the business. Now, in terms of each of the markets, this is how we do it. I'll go slowly for aviation and then speed up. So even within aviation, even within a market that I've outlined, we try and take niche positions. We're particularly good with fluids in aircraft, and that means fuel, coolants, and hydraulics. The growth drivers, the market growth drivers, pretty well understood in terms of new aircraft build. Boeing famously 7 years of order book and so on. Remember, if you're a filter manufacturer, it's not just new build, it's aftermarket. And we're about 50-50, so it's both new build and passenger miles based on maintenance schedules. And we are on, Porvair is on every single commercial airframe in the world, including the Russians, including the Chinese, every single one to some degree or other. We are about a third wide-bodied, a third narrow-bodied, and a third little bit of military, helicopters, that sort of thing. So on the market growth, we then try and point to organic growth that we have generated ourselves. And I'll cover some of those. The inerting filters is a good example, going from nothing to about $4 million of annual sales. A program that came out of the TWA jet that fell into Long Island Sound in 1996, spark in the fuel tank. Long story short, it required a whole new set of systems from Parker Hannifin, which requires very high quality filtration, which Porvair does for all of Airbus and all of Boeing. New build with retrofit starting this year, and then in each case we need to be clear why we think we've got a competitive advantage. I'm happy to answer any questions about that afterwards or in the bar. In energy and industrial, slightly different. We're particularly good. The niches here, particularly pulse jet and hot gas. The hotter the gas, the more comfortable we are. The hotter the gas, the more difficult the job. And a pulse jet system is simply the engineering system that reverses the flow through the filter so it knocks off the cake periodically, typically every 90 seconds. That takes you into nuclear work. A little bit lumpy, can be interesting. Gasification, very attractive, based on these days on the disparate gas prices. Henry Hub in the US, as you all know, is $3 to $4, but in the Pacific Rim more like 12, and that's driving all sorts of interesting people to put gasification systems in, which is the process that takes hydrocarbon materials and turns them into gas at about $5 a and these filters, which in this case would fill this room, have been going very well of late, and I'll come on to those. In water, slightly different feel to this business. We have about a third of the world's analysis of inorganics in water. Your water is tested for organics, inorganics, metals, sludge, bacteria, so forth. Inorganics is what we do, and the associated consumables, and it's the consumables that attract us to that. If you sell a guy a machine, it's going to take its weight in consumables over the course of its life, which will be about 7 years. So the growth drivers there, I think, are well understood. There's only 3 EU countries that comply with the EU Water Directive, and in China, $750 billion going into hydrology in the latest 5-year plan, very little of which will find its way to Porvair, I'm sorry to say, but enough to make this an interesting place to be. And finally, molten metals, different division, different technology, ceramic foam. All metals have to be filtered, and we have about half the world's aluminium filtration. Aluminium consumption grows by about 6% a year, and this is a business that was very low margin for a long period of time, and through the product development process that we have, we've turned it from really very little competitive edge to now fully patented and starting to deliver some decent margins, as you'll see in a minute. So those are the things that we do. This is where we are. I don't propose to dwell on that, other than to say we are at least half of what we do is in the States, both by manufacture and particularly in this case by destination. We are underweight in Europe, we've got nothing in Southern Europe, and China is growing at double digits a year, mainly through the water business. And this then is the 6-year performance, on which you can draw your own conclusions. We were a £45 million business by the time we dusted ourselves down. We stayed that way for a while the new products started to come through. Since when, which was about in 2007, we started to find some growth. We had a very difficult recession, as all engineers did, but we managed to pick ourselves up and have made some progress thereafter, both in the Americas and in Asia, which is where we really see the growth. Sorry if you can't see that at the back. Finally, on the balance sheet, we did get ourselves rather over-indebted, frankly, prior to the recession. We are a very cash-generative company when we choose so to be. We're down to about half debt to EBITDA now, which is about where we need to be, and we're going to do a bit more investment over the next few years to start to ride the next wave of growth, so you won't see the debt coming down very much further than that. So that, in a very brief period of time, is the strategy and what it's delivered. I'm going to just run through the slides with you now very quickly, just because this is the year-end presentation. We had a good year in 12, it's now 3 months old. These slides are now 3 months old. We put an IMS out yesterday to say that we've started the current year well. There's nothing to say about the P&L. It's a very straightforward business. There are no wrinkles at all, and the balance sheet is equally clean, frankly. We remunerate our people on cash, which means that we can grow 12% without any additional working capital, and we pretty much do that. And CapEx, where is CapEx? Can't see it here. Sorry, 1.9. That's about what you need annually to keep this business ticking over. About £1 million of maintenance CapEx and £1 million of further investment. This current year, actually, it's going to be a bit more because we're investing in a new plant in China. But that's the sort of level of CapEx that is sufficient for the scale of business. 2 divisions then. This business, you see the margins are not as good as you'll see in a minute, but the cash is sensational. And if you want to pay a dividend, do a decent amount of R&D and the odd acquisition, you need a cash generator, and this is our cash generator. It's a very unusual business. Only got 2 competitors in the world, and is very good at what it does. And the second division is rather more remunerative and growing very nicely, with aviation really driving that, I must say, at the moment. So that's a really quick canter through. This is the only other slide that I want to dwell on, because we've had a very good run over the last 3 or 4 years. And so when we talk to investors, the question in everybody's mind is, well, can you keep it? Can you keep it going? What gives you any confidence that you can keep it going? So here I'm going to slow down a bit. We look at 3 things. 3 things are going to drive the business. Market growth, which we obviously don't manage, and so we don't spend much time on that. But market share we spend a lot of time on, and that's essentially new product development, and we spend a lot of time on margins. And here Our internal sort of language of this is the accumulation of small improvements. And all I want to, without grinding through all this, all I want to make clear to you is in each of the 4 businesses as we go through, we know exactly what we're doing. We know exactly the programs that we're trying to deliver. There's, with one exception, no jam tomorrow in what you're about to see. These are all programs that are in place, that have orders behind them, that are delivering. I mentioned the inerting filter, which is growing from 0 to 4. It's about halfway up that growth, $1 million of sales, about halfway up that growth curve. The 380 to 787, we're all over the 787, nowhere near the batteries, I'm happy to report. But that's just starting to get going now, and actually Boeing are starting to call off more work. We haven't started on the 350. The NEO is miles away from going. It's a very nice business, this. We did a deal with Honeywell not so long ago, which with sales starting next year going to 2035. Not at all unusual in this line of work. And then margin growth. This business is still very much UK based. The customers are increasingly US based, and so we're simply moving skills, people, equipment from here to there, and that's enabling us, exactly the same as Stadium Group, to do a bit more in terms of the componentry and the other stuff that goes around the filters. So aviation, very clear. Energy and industrial. The margin growth is the same, no different. Taking a UK-based technology, expanding it to the US, about a 5 times bigger market. But this the market share gains are different. We've had 3 big wins in the last 12 months, which really are going to enable us to accelerate. This is a gasification, one for POSCO, a very large Korean steel manufacturer, $10 million of filters, about half of which have shipped, half of which will still to go. A nuclear facility for about 11 million, and just about a month ago, what at this point we were calling a promising pipeline, but another set of filters for Reliance Industries in India, who were very circumspect about what we were allowed to say about the scale of that. So all we were able to say at the time was it's about 3 times the size of POSCO. I'll just let you get your pencil and paper out and see if you can work that out. So big contracts for a business of our size. Good margins, the sorts of margins that Stadium are talking about. And remember that this is not one-off work. Right? These filters, about the size of this room, will last for probably 24 months, and then they will be replaced, not because they've run out, but because if they don't, there's a risk that they'll run out, and you're down for a day, a week, a month, at $1 million a day. So it's not so much the first installation, attractive though that is, it's the fact that you're going to get repeat orders, as long as you don't mess it up, every year for 25 or 30 years. Net present value of that is substantial. Right? The other advantage that these sorts of things give a company of our size is that cash running through the balance sheet makes, in the end, it's free cash flow that is the limiting factor to your growth. That cash makes a hell of a difference to what we can achieve and how fast we can achieve it. So that's very significant. In answer to the question, can we continue the sort of lick that we're at the moment? That's a very significant part of the answer. In laboratory supplies, I'm not going to go into this. It's much more detailed. The bioscience filter development you see there is a very interesting filter at the molecular level for genetic research, but it's certainly pre-revenue. We've got a long way to go on that, but it is the sort of thing that the new product development philosophy takes us into. And in metals, lovely patented suite of products now. We've run out of space in China, so we're building a new plant which will be ready towards the end of the year. So again, don't try and take all that in. The point is, can we continue to grow at around 10 or 11% as we have done for 5 years? There's more than enough on this slide, we think, to support that. We're not immune to business cycle or anything else, but in terms of what we can control, there's plenty to go at there. So the summary is, if you find niche positions in the right growing and regulated markets, there's plenty of opportunity in the sort of thing that we do. There are lots of filtration businesses listed in the US. There are none in the UK. We're the only one. So there's plenty to go at. Order books, promising. I think we mentioned that in the IMS yesterday. Order books are ahead of where they were last year. They would be with these big projects, but even stripping those out, the order books are ahead of where they were a year ago. So we feel in pretty good shape, and the recent outlook statements have all been positive. I am done.